watching Market Cafe with me, Shreyanshi Singh, and over the next 1 hour, me and my co-anchor Priyanka Uppal are going to be taking you through news and updates from within the country as well as across the globe, tell you which stocks you should keep an eye on and tell you what the brokerages are saying as well. But first things first, let's take a look at what the Wall Street really did. Because when you take a look at the move coming in on Friday, you did see the 30 stock Dow rising just about 0.3%, finished at a new all-time high and ended the week about 0.6% higher as well. When you take a look at the S&P 500 as well, you're looking at gains coming in there as well. So gains of about 0.6% there as well. And Nasdaq Composite was the real outperformer because that climbed almost 1% during the week, and those are the kind of moves that we saw for that one. Now, Wall Street, of course, is on track to end September on a positive note. Month to date, of course, the Dow as well as the broad market index are up 1.8% and 1.6%. So those are the kind of gains that you're looking at when it comes to those two indices. When you take a look at the tech-heavy Nasdaq as well, it has also advanced 2.3% in September, was the real outperformer there in that entire pack. And markets, of course, had a rough start coming into the weakest month historically. But then, we did see a pickup come in after that bumper Fed rate cut as well. And that is something that we saw having quite an impact when it comes to the month-to-date performance. Now, when you take a look at the quarter-to-date performance, of course, you do have the S&P 500 that is up 5.1% on the quarter, stretching its year-to-date gain to about more than 20%. And that's the kind of handover in terms of a quarterly basis that we're looking at now. Of course, there's a whole host of cues that we're going to be keeping a very close eye on, and the number one on that list, of course, is the September's jobs report that is out on Friday. That's the one that will give the market a little bit of a major test later this week. On the earnings front, of course, you do have Carnival reporting its numbers, but that largely is the kind of handover that we're keeping an eye on. Next, let's also take a look at what the oil market is doing, because that's the one that has been in the spotlight. When you take a look at US crude oil, you're looking at a weekly loss coming in as the prospect of growing oil supplies from Saudi Arabia overshadowed China's efforts to stimulate its economy. So that's something that we're looking at. When you take a look at US WTI, then you're looking at a fall coming in of about 5% this week. So that's the kind of handover that one has had. And when you take a look at global benchmark also, you're looking at a pullback coming in there as well. So 4% pullback is what you're seeing for the benchmark Brent there as well. Now, prices, of course, have fallen even as conflict in the Middle East escalates, with Israel also launching an airstrike in Beirut targeting Hezbollah leader Hassan Nasrallah. Of course, we'll be getting you more updates on this, but that is something that we saw coming in focus when it comes to the oil markets. But let's also kickstart the morning with some key macro news. Then the US PCE price index rose 0.1% for August, putting the 12-month inflation rate at 2.2%. Meanwhile, the core PCE price index, which excludes the more volatile categories of food and energy, rose by 2.7% over the same period as well. So that's the sort of move that we saw coming in there as well, matching markets' consensus. Now, monthly growth in the core PCE price index was 0.1%, that is below expectations. Remember, now the Fed tracks the PCE price measures for its 2% inflation target. So that is something that we were looking at. Shifting focus from US macros to oil, then the OPEC Plus alliance is also once more cracking down on group compliance with oil output cuts as it presses ahead with a three-pronged plan of formal and voluntary production trims. Now, the OPEC Plus coalition has sharpened its focus on the conformity of its members with their output pledges amid repeat overproduction from heavyweight members, the likes of Iraq and Kazakhstan as well. Moving on then to the auto space, Volkswagen has trimmed annual outlook for the second time in less than 3 months. This comes amid a weaker than expected performance at its passenger car division, as pressure on Europe's top automaker also continues to rise. Now remember, the lowered outlook is the latest from Germany's car giants, with Mercedes-Benz and BMW both downgrading their annual forecast earlier this month as well. Moving on then, China's central bank has announced that it will lower mortgage rates for its existing home loans by 50 basis points on average before October 31st. Now, this comes as part of sweeping policies to support the country's stressed property market as the economy also slows. Now, the central bank has also focused on interest rate reduction in batches to no less than 30 basis points below the loan prime rate as well. Alright, then shifting focus to geopolitics, Israeli Prime Minister Benjamin Netanyahu has said that Israel had settled the score with the assassination of Hezbollah leader Hassan Nasrallah in a Beirut airstrike. He also emphasized that Nasrallah had been responsible for orchestrating numerous attacks on Israelis and foreign nationals, including high-profile bombings in the 1980s as well. Alright, and with that, we're completely timed out on this segment. We'll see you on the other side with an update on what the Asian markets are doing, so don't go anywhere.
Welcome back. You're watching Market Cafe on ET Now. This is Priyanka Uppal. And the last week, the stellar moves came in from Asian markets. In fact, out of all the global markets, Asian market rose the most. But then today looks a little nervous day for at least the cues coming in from Japanese market. Nikkei has opened with a 4% off cut. And this is on the back of a political development which is happening in the country. Now, on Friday, the election results to which now the Nikkei, the Japanese market is reacting. Yen has fallen against the dollar. The result of the ruling Liberal Democratic Party election. That's what seems to be weighing on the market right now. Now, the Investor Digest, Shigeru Ishiba's victory, he's from the Liberal Democratic Party, and the elections which happened on Friday, he was a former defense minister and has, it would be his fifth term to become the Japanese Prime Minister. But the market is a little nervous about it, and we've seen a deep cut coming in on Nikkei. Nikkei and Hang Seng, they rose the most out of all the markets last week, more than 10%. And Hang Seng seems to be continuing its rally. It's still up 2.5%. Some strong set of cues coming in from China again. China will release its official PMI numbers for the September month. And remember, China was the key market, the key triggers globally for the markets came in where China's central bank announced some policy measure, and hence the move we saw in metal index and even to some extent the auto stocks in India. Now, more cues coming in from China. Shanghai is right now 4.5% up. So seems like Japan could be a little nervous. The second big trigger to watch out would be the movement of yen. Now, the Japanese yen has again weakened against the dollar by a quarter of percentage. Now, as and when this kind of move comes in, then the yen carry short trade, that trigger weighs on the investor's mind. That's what could be possibly a reason that Nikkei is down by 4% right now. Moving on to other markets, broader markets. In fact, let's talk about the Australia market that has climbed nearly 0.5%. It has in fact breached its all-time high of 8,246 rupees. And talking about the other cues, South Korea's Kospi, that has fallen by 0.5%. Kosdaq has slipped by 0.5%. Now, moving on, let's understand how are the cues looking in for Indian market in terms of the GIFT Nifty. The implied, how is the GIFT Nifty right now moving? It's nearly up by 50%, 50 points. Looks like that we are in for a continuation of the move which we saw last week. In fact, we are on pace to a strong month and even a strong quarter.
Well, absolutely. On Friday, we did close around the 26,178 levels, and currently that is what we're penciling in. So let's really see how that really pans out for us. But
welcome back. You're watching Market Cafe. Now let's get your special conversation. My colleague Aishwarya Patil spoke with Paytm founder Vijay Shekhar Sharma about the event business and its recent boom. In fact, this would be the first interaction of VSS post that they got the FDI approval. They're aiming for a payment aggregator license. Let's see what exactly he spoke about many of the events.
So first of all, there is no secret about it that what we are building in India is a solution that is meant for us, meant for Indians. And I always said it that we Indians can solve India's problem. When the brain drain stopped, you saw tons of problem getting solved, so much startup, and I truly acknowledge and I can give this as a milestone when Honorable Prime Minister called it Startup India. That is the time when we started to become the Startup India. So today we are seeing the dividend of it, not just the payment, but in so many spaces you have the problems of Indians solved by Indians. And AI is definitely the tool where we will have lots of use case. And well, I think it is early days. It's like saying internet in 98, 99, that what really the maverick or the incredible impact will come. But definitely it is one of the tool toy that we want to solve problems.
You know, when we hear Amitabh Bachchan's voice on that sound box, everyone is thrilled. But everyone, like you mentioned, any competition that's following into your footstep is not your competition. But Jio, Reliance, etc. are following into the footsteps. Do you think there's more headroom for Paytm to expand there?
Yeah, the market is really big and it actually is meant for many players. In other words, I was talking the innovation thing, that we will innovate newer things for sure continuously. And as far as India is concerned, obviously we are at every number is a very beginning stage, if you notice.
What is the next benchmark for sound boxes for Paytm?
We have about tens of million sound box, and I definitely would want many more tens of millions there.
I want to know what is VS's favorite artist. So you have given up on your baby, which is the events business, to Zomato. If at this point you've seen the kind of craze for Diljit Dosanjh's concert, for Coldplay as well, what's your favorite artist, and why this move at this point when this is such a lucrative business and such a trending business at this point?
Chris Martin.
Oh my God, you already met him. Now we want more tickets. But why the move on the events business? Because it's such a lucrative business.
I think it's all about the bottom line centric approach that we have taken, that we want to focus on the core, and core of ours is payment and financial services. We'll stay committed to that.
And quick delivery is really picking up at this point. Paytm's mall, will we look at instant delivery going forward?
Absolutely no.
It'll be business as usual.
Alright, then that was a slice of that very exclusive and interesting conversation with Paytm top boss Vijay Shekhar Sharma. But let's keep it going with interesting conversations then. And we also caught up with the MD and CEO of the National Stock Exchange, Ashish Kumar Chauhan. Listen into a slice of the conversation with him as well, as he talks about the F&O trade and suggests small investors to invest and not speculate.
Many more small people, small traders are attracted and they are making losses. That's why SEBI is trying to create a framework of regulations which ensure that the small people actually continue to invest more and work on capital formation. And that's where these regulations are being proposed.
We've seen a stimulation in the Chinese economy. What kind of an impact do you think it will have here in India?
Broadly speaking, world is connected. At the same time, China is going through its own issues on their economic front, especially with real estate. And it seems to be a grave situation there on many counts. And that's where the government there has taken this steps first time to even distribute money for their national holiday. And that's showing you that that particular economy is going through the stress.
Are you expecting a rate cut from the RBI this time around?
Broadly speaking, across the world, the monetary policies are synchronized with some lag or some sort of advanced framework. So broadly speaking, that's where if inflation in a particular country is under control, they would try to synchronize with the rest of the world going forward.
All right, that's a special conversation you're hearing on ET Now. But then let's get you more from the Asian markets. The data which was awaited was PMI index data from China, which has come in. And in fact, the China factory activity, which contracts less than expected, what was expected in the month of September. In fact, let's see quickly what is the reaction seems to be coming on Shanghai. It is 3% up. And in fact, even on the, because this was a key data, especially after the central bank, and in fact Chinese economy is continuously trying to boost its economy. There are fears of slowdown. Big FIs are turning out from China, and then in fact they have been on the verge of taking necessary fiscal spending steps also to boost investor sentiment. But let's see how this pans out. So let's get you the PMI data, which talks about that it has contracted less in the month of September. China's factory activity, which contracts less than expected in September. The official PMI number which came in is it at 49.8 for the month of September. Expectation in comparison to what it came in August month was 49.1. In July, the figure was 49.4. In June, it was 49.5. Now, the data is slightly a beat, 49.5, which is expected amongst the economists polled by the big agencies there. Now, the headwinds for the manufacturing sector has continued to mount on a prolonged economic slowdown and the property crisis, which is dampening, of course, the domestic demand. So, this data is surely good enough to keep the movement upbeat now. Okay, coming back to Indian markets and the key triggers coming in from the stocks which were in news last week, PB Fintech is one of them. PB Fintech is planning to foray into the healthcare sector, and we saw the kind of slump came in. In 2 days, the stock fell for 15%. At the TIE Summit in Delhi, we caught up with the Vice Chairman Alok Bansal to talk about the same. Listen in to a slice from the conversation.
See, we want to ensure the experience of the customer is superior compared to what it is today, while maintaining the cost for the insurance company within a particular limit, right? Today the problem is a person who is walking into a hospital becomes a revenue for that hospital, but it's a cost for the insurance company. Unless they work together, that can't be solved for. Somewhere the claims being the 70% cost for the insurance company is a very important part of how these two entities work together. And our intention is that insurance companies win, customers win, and somewhere if they both win, the penetration will be much higher and policyholder will win. So we are coming from the insurance angle to this, and assets anyone can own. That's not a big problem. We are still a bit away. See, first of all, why is very clear. Why someone should do it, whether it's policyholder, whether it's government, whether it's particular insurance company. The why is clear. What is still not clear, and how is still a little bit far away. Once we have the clarity, we'll go to the board. As soon as we go to the board, we'll come to the markets, and eventually, obviously, we'll have explanation given to the analyst. My idea.
Do you have a timeline?
I think we should be ready to go to the board in between 4 to 8 weeks, I would say. By the time we'll have some idea of what it takes. After that, yes, it will keep on developing, and the delivery may take few years, but at least the idea will be clear, or clearer than what it is today, at least.
It is tied up very well to the main offering of the company.
Oh yeah, so from our perspective, we are just thinking of how do we go deeper into customer experience, right? So the reinsurance brokerage thing that we came out with about 6 months back maybe, the whole aim was, can you differentiate the product being offered to the offline customer versus digital customer? Similarly, if you are able to do something with the garages, something with the hospital, it's an additional service to the same customer. So these are very linked in. They are not separate initiatives.
The GST reduction that many industry players, and of course Minister Nitin Gadkari had also asked on health insurance. Do you think if that comes about in the next GST Council meeting or any time soon, how do you think that is going to impact the overall business?
So definitely, see, anything which helps customers take the decision. Now, obviously, GST reduction means the pricing will come down a little bit, which is helpful, but I don't think that's the only thing which is restricting customers to buy these policies today. See, if 18% becomes 5%, 0%, yes, it's a definite saving. But eventually, it's all about trust. You are paying today for a potential future claim. And if you are not sure that you will get that claim, why should you even pay even 5 rupees, leave apart 10,000, 20,000 rupees? So, yes, it's a positive step. But I don't think that is the only step which is needed to increase the penetration. I mean, there's just too much back-end work which is required today.
Alright, then moving on, just before the beginning of the much-awaited festival season, Indian car market has seen 2 major launches in the last fortnight itself, both unique in their own way. While the first one is a CUV or crossover utility vehicle Windsor from JSW MG Motor. The other one is Tata Motors Coupe SUV called Curve. ET Now Sumit Chaturvedi drove not one but both of them, and he will explain what really makes them unique. Take a look.
First, we will talk about MG's Windsor. It is CUV. They are calling it CUV, called crossover utility vehicle. Well, this is a EV of MG that has got its unique feature, unique design. It is placed between MG's upper bend EV and smaller Comet EV. But let's talk about its shape. Well, beginning with its shape, it has a unique all-package kind of shape, unique shape. It has got chrome in the front to show and give it a premium appeal. It looks like a futuristic vehicle. MG is calling it CUV, crossover utility vehicle. It has got a lot of utility features. Not a proper SUV, but it has got very good ground clearance. It has got features inside which are good as far as the space is concerned. It has got the biggest display when it comes to seeing your all things. It has got a panoramic sunroof as well. So it's quite spacious from inside. It has got a utility and purpose when it comes to overall inside look and feature. The panoramic sunroof makes it really, really airy, roomy, everything. From back also, it has got good space. It looks like a proper utility vehicle from inside. And when I drove it on roads, definitely it could go through potholes, it could wade through water, it could do a lot of things which a SUV can do. So company is giving this car at a price of 10 lakh rupees. But if you talk about another car which is also available and at a price of 10 lakh rupees is Tata's Curve. Well, we drove Curve, it has got all the features. Now Curve is available in petrol, electric model. Also, we're talking about Curve in ICE, which is internal combustion engine of TAR. It has got lots of features inside it. Tata Curve is also one of those vehicles which have come to market with a new thing. It's called SUV Coupe. New design complete with Tata Curve SUV. It has got all the features, all good inside and outside features. Got a new design. Inside, it's a bit less roomy as compared to other vehicles, but yes, it has got a very promising design. So these two vehicles have come to Indian market in this festival season.
All right, thanks very much, Sumit, for the sneak peek. Of course, this particular segment, the SABU segment, that's what driving the sentiment for the auto sector. In fact, the premiumization trend we've seen clearly in many of the stocks. Now, moving on the occasion of the World Tourism Day last week and on the sidelines of the Thai Summit, ET Now caught up with the managements of Ixigo and Make My Trip to put spotlight on the travel trends. Listen in.
If I look at my fastest growing businesses last quarter, right, flights was one of them. I mean, we grew 28% GTV, year on year in a market where only 4.5-5% growth occurred, in aviation. If you look at our transactions, almost 94% of our transactions come with a leg in a tier 2, 3, 4 town. And I think a large part of that growth is being driven by, the underlying platform shifts.
Indigo's done great, but now that Air India's got privatized, we're seeing Tata's pour a lot of money into that. And I think we are also going to see exciting things with some of the smaller players. Akasa's got funding, SpiceJet's got funding. So hopefully aviation sector is on the up now. So we remain excited about alternate accommodation. We think it's huge, which is homestays and villas. We're very excited about corporate travel, self-serve, we call it MyBiz, or fully organized travel. International short-haul travel we think is very big. Pilgrimage travel we think is going to be a very big growth area.
Alright then, time for a very quick breather on the show. When we come back, we'll take a look at what else is happening in terms of the stocks that you should keep on your radar as well.
Welcome back. Now let's get you a quick check on from the derivative space. Ansh is joining us after a long break. Ansh, what a fantastic week when you were not here. FIs have increased massive their long bets on Nifty. Long short ratio itself is on a record level. Tell us more of the action from the derivative space.
That's right. So let's pick up from that FI position only. So FI position in index futures are around 81%. But we can't say that we are in overbought zone because similar level was seen in June as well. Post which we saw some consolidation but not a correction. Also, if we see retail's long position, then that's just around 34%. So we have good room on upside. Now, if we talk about Nifty, then Nifty has been hitting that record high level from last 8 consecutive sessions, indicating very strong positive momentum building up in the market. Also, it has been sustaining about that 26,000 breakout level, which keeps a very good positive sign in the market. Now, if we talk about index options, then here also we are seeing highest open interest put writing happening at that psychological level of 26,000, indicating option traders are also agreeing with this support. Now, if we talk about Nifty Bank, then here index is actually in a consolidation phase. And if we talk about range, then range is around 53,700 to 54,500. So unless and until we don't see a decisive breakdown from that 53,700 on downside, till then we can expect some consolidation happening in the market. Whereas on option front, we are seeing very strong call writing happening at 54,300 mark, indicating option traders are seeing some resistance around this level. Lastly, let's have a quick view on few F&O stocks that are in focus, and we are seeing significant long build-up happening in BPCL, Excite Industry and Polycab, where short build-up for IEX, HDFC AMC and GCPL. So keep an eye on the stocks.
Well, absolutely, Ansh. We'll be keeping an eye on all of those counters. But moving on, then let's get to the list of stocks that are likely to be buzzing on account of news flow as well. And Ria is standing by with just that list. Ria.
Yes, good morning. So let's take a look at all the stocks that are going to be in focus today. First up, we have Bharat Electronics, for which the Ministry of Corporate Affairs has approved the inspection of BEL IAI Aerosystems Private Limited, which is a joint venture company between Bharat Electronics and Israel Aerospace Industries Limited. Now, this company is going to provide support, including repair and maintenance and other related activities for the medium-range surface-to-air missile systems that are going to be deployed and used in India. We also have Tata Motors in focus, since they have conducted the groundbreaking ceremony of the new vehicle manufacturing facility in Tamil Nadu. Now, this facility is going to manufacture cars and SUVs, which will cater to the requirements of both Indian and international markets as well. Now, Tata Motors Group is going to invest rupees 9,000 crores in this greenfield manufacturing facility, which has been designed for an annual production capacity of over 250,000 vehicles. Now, this production will begin in a phased manner and will progressively increase to reach this peak capacity over the next 5 to 7 years. And this plant is also going to use 100% renewable power and is expected to create 5,000 employment opportunities going forward. So definitely keeping an eye out on Tata Motors on that front. We also have a whole host of pharma stocks in focus today. First up is Lupin. Now, the US FDA has inspected Lupin's Pithampur Unit 1 for the API and finished product manufacturing facility from the 16th of September to the 27th of September, and they closed this inspection with 3 observations each on the API and the finished product side. We also have Zydus Life in focus, since they have received the final approval from the US FDA for the enzalutamide capsules, for the 40 mg capsules, and these capsules had an annual sales of $869.4 million in the United States last year. We also have Piramal Pharma in focus, since the US FDA has issued an EIR for the manufacturing facility located at Ahmedabad, and on the 12th of July, the US FDA had inspected the facility and had issued Form 483 with 0 observations and a no action indicated designation. Lastly, we have Alembic Pharma in focus, which has also received an EIR for its oral solid formulation facility, and this inspection was carried out between the 17th and the 26th of July, and with this, for all of its US FDA facilities, the EIRs are now in place for Alembic Pharma. So we're definitely keeping an eye out on all of these stocks today.
Thanks very much, Ria, for all the updates. Well, moving on, let's get you the key brokerage notes also. Jinay is joining in. Jinay, over to you.
Well, yes, first up we have Morgan Stanley on the painting stocks. We'll talk about Asian Paints. They have maintained the underweight rating with a target price of 2,522. What they believe is that lower commodity costs will benefit the company, and they have raised the earnings by 4% expectations, and they have also raised the EBITDA margins expectations. Now they are assuming a 19% EBITDA margins compared to 18.4% earlier. For Berger Paints, they are maintaining underweight rating with target price of 497. What they believe is that the earnings could be higher by 7%, and EBITDA margins assumptions have been raised to 16.2% from earlier expectation of 15.5%. Moving on, IndusInd Bank will be in focus, as Goldman Sachs have given buy rating with the target price of 1635. Now what they believe is the board has reappointed MD and CEO, though the RBI approval is still awaiting, but what they believe is that this development removes the near-term hang of the management changes which the company had. Also, the bank is better positioned overall according to their margins management, and they believe that the stock is trading currently at a deep discount to their 10-year valuations, giving positive for IndusInd Bank. And lastly, Zomato will be in focus, as CLSA have maintained outperformance rating with the target price of about 284. What they believe is that Zomato gained in metrics over Swiggy both in FY24 and in Q1 of FY25 as well. Also, the QSR are losing their market share to aggregators. They believe that the Swiggy will be well positioned once it's fulfill its funding gap. For now, Zomato remains their top pick.
Jinay, for that update coming in, but let's also shift the focus to management meets now, because Macquarie has come out with a note of highlights coming in from the management meets of Syngene and Biocon. Firstly, let's take a look at Syngene first, and when you take a look at what they had to say, they're highlighting the management expecting strong recovery in the second half of financial year 25, and in terms of the research to manufacturing ratio, they're penciling that in at 50-50. That is the kind of aspiration that they're highlighting when it comes to Syngene. And in terms of what else they're highlighting in terms of the timeline, largely they're penciling in planned completion of major infrastructure projects by financial year 26, and by financial year 26 they're also expecting to triple bio-manufacturing capacity as well. So that is something important that they're penciling in terms of the outsourcing trends. Then when you take a look at what Macquarie had to say, they're highlighting how the outsourcing trends are favoring India versus China, and that is also something that they're highlighting. Next, let's also take a look at what they had to say about Biocon then, because it's the Viatris acquisition that they're seeing as a key re-rating trigger for biosimilars as well. In terms of their growth, they're seeing accelerated growth coming in from the second quarter of financial year 25 onwards as well. And the introduction of new products in generics division is also something that they're highlighting. And in terms of the expectations as well, they're also talking about how the company is aiming to reduce net debt to EBITDA to less than 1 in the medium term, and that is also an important trigger that they've highlighted when it comes to Biocon as well.
All right, that's the two analysts meet. We'll keep both the stocks on the radar. They both move generally in tandem only. Now, moving on, why is Manish Dangi cautious on equities? Though equities are faring high, but then he has a cautious view, and in fact, he's more bullish on bond market right now. Now, what is fueling his faith in the bond market? Let's hear out experts from his chat with, let's understand why he's advocating caution over the Indian equities right now.
It's sort of fairly plausible that rates go further down. As we've discussed a couple of times in last 6-8 months, that rates in India could get to 5.5 or thereabouts. So there is still a runway there. I think I like that space. I think the bond yields in India will be sharply lower in next 1-2 years, perhaps even lower than what we saw in COVID. Gold could be a small allocation. Again, it likes the fact that real yields in US will come down. So therefore, it's done really well already. So to that extent, you should be cautious there, because gold, you have to be worried that it tends to get into these phases where for a long time it doesn't perform. So you never scale the allocation there. There is no coupon in gold, right? So be careful there. Equity is a space where there's a lot of momentum. The margins sort of remains high both in US and India. But the revenue sort of has started to come off. Even EBITDA and PAT sort of in India, last quarter numbers were not that great. So you ought to be cautious, that remains my view. Now, when
so cautious on equities?
Yes.
Bullish on bonds?
Very bullish on bonds.
And neutral on gold?
Neutral on gold. And I can actually, because, we've launched this strategy, I think, from a purely, because I'm more of a macro top-down, what is good guy. And I think it's sort of reasonable to assume that even though India enters in a slowdown, because it's likely that Indian balance sheets are so clean that the slowdown won't hurt them much. So even though the pressure on P&L appears, margins will come down and disappoint equity markets. Balance sheets are squeaky clean, and therefore they'll be able to service the loans. So if you can get great opportunities in lending, I think there is a decent risk premium to make. My sense is that people who can afford and can move to high yield strategies, ours and many other such strategies exist. I think it's a better place to hide yourself. That's the way to actually play growth or play extra risk premium versus equity right now.
Asset classes. Importance of asset allocation. 80% of the wealth is always created by the right asset allocation. And assets, you have to always look at your portfolio, the asset basket, what you have, where the excesses are, or historically high returns are there. You need to perhaps take some chips off the table where returns have been low. You need to start increasing the weightage. That is the simple meaning of asset allocation. But we move to part 2, which is that according to you, equities, you need to be cautious, bonds, you need to be bullish, and gold, you need to be neutral. So can I say that for next 5 years, equity as an asset class is unlikely to give returns which are in line with historical averages? In the next 5-year return will be lower than historical averages, but for bond it will be higher than historical averages.
So if history were to have a rerun, then all that you need to know is if 5 years have been very good, the next 5 years would be rather bad, right?
Bad means negative returns, no returns?
No. It means very difficult to have negative returns for 5 years, right? But to ensure that an investor who put in money in 2019 over 10 years gets the same return as he would have earned in any point in time on average in last 30-40 years, because last 5 years returns have been so good and stellar, the next 5 year has to be muted to get to the median. So because you've earned 16-17% in last 5 years, you will have to end up earning 7-8%, right? so that the average is still 11% or 12%.
But when everybody says, okay, this time it is different, India ka decade hai, golden decade hai, flows are coming, retail has just started coming in, won't that make India a special situation, stock, so to speak, and
So-
we'll do better than the world?
Yeah, it's always good to bet India is special, as we did during COVID time, where I made this argument with you that it's a golden decade for India. At 8, 9, 10, 12, 13,000 of Nifty, arguing for that is one. But at where we are right now, to argue this when a lot of it already is priced in, and we know that India growth is now slowing cyclically. So that
Alright, then let's get you some more updates coming in from outside the world of stocks, bulls, bears and bonds. And after months of uncertainty, 2 astronauts stuck aboard the International Space Station since June finally received their transport. It is to be noted that Sunita Williams and Barry Wilmore have been stranded on the ISS since June after their Boeing spacecraft suffered thruster failures. However, the SpaceX rescue flight will not return until February. Moving on, then, an Israeli airstrike hit an apartment building in Beirut's Kola district, marking the first attack within the city's limits amid escalating tensions. Now, this follows a series of Israeli airstrikes on military targets in Yemen, specifically targeting Houthi-controlled sites, including power plants and a seaport. Numerous fatalities and injuries have been reported, with fears of further regional instability as well.
The Supreme Court is all set to hear today a clutch of public interest litigation seeking intervention into alleged presence of animal fat in the ghee used for making laddus at the Tirupati temple. Now, the matter pertains to the alleged use of substandard ingredients, including animal fat, under the YSRCP government. And the top court is also scheduled to hear the rape and murder case of trainee doctor at Kolkata's RP Kar Medical College and Hospital. Ahead of the hearing, junior medics from various government hospitals in Kolkata participated in torch rallies across the city.
Alright, then with that, we're completely out of time on this edition of Market Cafe on ET Now. From me, Shreyanshi Singh, Priyanka Uppal, as well as the entire team that put this show together, thank you so much for tuning in. You don't go anywhere because the market takes all of the action forward.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.